Hi guys, this is Lee with the Market Sense for the week of July 14th, 2020. The charts in this presentation are provided to us by Gettess and come from their Trade Navigator software. And this is the same weekly bond chart that we've been looking at for virtually all year in this sideways pattern, or at least close anyway. As we've been discussing, they had this substantial breakdown out of the sideways. And when that got reversed right away, the greatest likelihood is that they want to try the upside. And they are, but I just don't have any faith in them getting anywhere. I mean, the only way bonds go up, higher bonds correlates with lower interest rates. And how low can interest rates go? I think the only way you get that kind of move is if you get some sort of major crack in the stock market and creates flight to quality buying or fear buying. So if that doesn't happen, I think staying in this sideways is the most likely scenario. At the very least, as we've been saying, these 2 weeks here, this high here and this low here, I'm almost positive those are not going to be exceeded for the rest of the year. So we're just kind of stuck in sideways and trading both edges when we can. We've got resistance up here at 181.20. I'd be a little surprised if they get that high, but I'd be even more surprised if they go through it. Support, probably the best support, 78.22 area. Wouldn't surprise me at all to see them come closer to the 177 area down here at the lower band. Uh, I'm willing to take a shot at either of those if they appear to be holding. I just don't expect there's going to be tremendous movement in either direction. Now, stocks, we have a much different situation because, boy, Sunday night they opened up like they've been doing every Sunday night, it seems. And then they took off and kept going Monday and went up above the projected high, took out the previous swing high here, and just looked for all the world like they were just blowing right up out of here. And then they turned and headed south. Now, that largely happened when California announced they were kind of shutting everything down again. But what did that do? Well, it caused them to go down Tuesday morning and trade this projected low here at 31.28, and then they turned and went back up again. Now, when you have a situation where you've traded both the projected high and the projected low, the probable direction beyond that becomes no better than a coin flip generally. You can't really have a bias of much. The only thing you can do is default to the most recent direction. Well, pretty clear the most recent direction has been up. So if they're going to go out one side or the other of this bar, the most likely way for them to go is again up. They don't have to, mind you. Again, the probabilities aren't massive, but you got to default to the upside if you're going to pick a side. And the upside is, obviously to the old highs here. If they do go down, support around 30.96 looks pretty good. And certainly when we came into the week, that's what I thought would be good support for this week. Dropping down to the 30.27 area wouldn't be the end of the world, but it would be a little surprising at this point. The only thing I think that could cause that is maybe some sort of more upheaval in the virus, more fear of economies shutting down or businesses shutting down and harming the economy. But if I've got a bias to this market, it is to the upside. So I'll be looking for reasons to get long if there's anything sets up on the intraday. So that's what we've got for you today. I hope you can find something profitable to get yourself into.